Good morning. Thanks, Polly. Yep, everybody is happy today, actually. Wait, good morning, Robert. Today, Bernard. Oh, look at that. Hey, Kane. And my speakers don't want to work. Great. Well, we'll see when Roger comes in. Hopefully, they are working. Oh,
Good morning.
yep. Morning.
Can you hear me okay?
Yep, can't see you though.
Yeah, I'm working on that. There we
Hey
go.
guys, good morning.
Hey Kane, how are you?
I'm doing great. How are you?
Good, good. Good to have you here.
Thanks.
How are you feeling, Matt?
Yeah,
It's rough, huh?
yeah.
Yeah, I'm sorry to hear that.
You
Let me just
got sick from the hospital, Matt?
I think so.
Uh,
Yeah, that hospital. That hospital will get you sick. I think there's like a statistic out there that says if you spend X amount of time in the hospital, your odds of getting like pneumonia or something like that are like they just goes up a lot. Those hospitals, they don't do anybody any good. Let me just say hello to everybody, and we will begin. 1 second here. Roger Scott. Can't find myself for some reason. There we are. Oh, there we go. Hey, Infinitely, how are you? Hey, Pops. Hey, Doris, Jody, Edward. And let me go ahead and say to everybody, hello to everybody here. And can you make sure everything went out, Matt?
Yep.
Let's see here. Yeah, we got that. Okay. Kane, have you been very active during this time, or have you been pretty mellow?
I've been super quiet, super quiet. I have taken a couple trades here and there, but very, very judiciously and very small size.
Yeah, after today, after I spent an hour talking about the market and how we're bearish and how things are not looking good, somebody asks me publicly, uh, with all the tools you have, you couldn't find one long stock in 5,000. Like I just booted the guy out. I just booted the guy out of there. I was like, you know what? I'm not even going to answer. I'm just booting you out. If you don't get
I
it,
don't
if
blame
you
you.
don't,
Wow.
the market's down. It's like, what do people need? Like, what do I need to do to make you understand? Like, should we just take your money and burn it? Will that make you understand? I mean, like, you don't, I'm trying to help you here. I'm literally trying to help you. I showed everybody I actually did, Matt, I don't know if you saw or not. I did something I never do today. I showed everybody our spreadsheet publicly in the channel to show everybody all the positions that we have, to show them that we hardly have any positions. We don't have any positions. And I'll do it here right now too. I'll show you. Here, let me share my screen. You'll see we hardly have any positions. Look. Here, let me move that. We believe it or not, we actually practice what we preach. We don't really have a lot of stuff going on here. Here it is. This is it. This is everything we have, folks, in all our programs. Everything. We have Guild and A-Line, which is defensive, which is actually up today. We have Yum Brands, which is actually was almost at a profit today. We have this one, BK, which we still have 2 weeks till expiration. So we have 3 stocks and a spread that expires tomorrow. So that's it. That's all we've got. We usually have 3 here, 3 here, 2 here, 3 here, 3 here, quick here. We have nothing. We have nothing in Quick Strike. We have 1 stock in A-Line, 2 in True Trend, nothing in Gap to Green, nothing in Overdrive, nothing in Stealth Surge, and 1 in... That's it. That's all we have. Now, let me ask you, don't you think if there was a high probability, I would be taking them? This week is the first week that I have not issued trades in the pit every day without having any trades on. Usually if I already have trades, I'll be more cautious, but we haven't even had any trades. Boyd, I'm going to teach you something. You don't publicly post my pit trades in the members in a free YouTube channel for everybody to see. We don't do that around here. We don't do that. That's a no-no. And I was just talking about that. Today was the first time that I actually put in a trade in the pit. We don't talk about those trades. All right. We don't, I know you didn't know, just don't do that again. Don't talk about open pit trades or any other trades. These I'm showing you because we haven't added anything to these. Yeah. There's nothing in it for people. There's nothing new here for it. No, I wasn't doing that. I never talk about pit trades, but that's okay. It's no big deal. You didn't know, no harm, no foul. Here, let's take a look at the SPY right now. Let's see what's going on with the market. We talk about them after we closed them out. So what is the SPY doing today after opening? What is the SPY doing today after opening down almost 3.5%, 4%? The SPY is doing nothing. Look, it's doing nothing. After a down move like that, you would expect a big bounce or a bunch of nothing, which usually leads to a reversion back down. It's nothing after this. This is something. This is something right here. So we're basically just making waves. Now, remember what I told you today. A capitulation would be if we right now started skyrocketing up, like skyrocketing and closing like up here with the candle being there. I'm not seeing any of that yet. On a gap down, that's very, very dangerous. Very, very, very dangerous. What's even worse is if you look at the Vold, Matt, look at the Vold today. I wish I could share Matt, can you do us a favor? Can you show us your Vold with the SPY on top of it? Because they can't see it here. I want them to see it. Can you do that?
Yeah.
Here, look at Matt's screen. I have it right here. You can't see it. I'm looking at it right. I have my market internals right here on the sheet. But it's all right, Boyd. Don't worry about it. There are people here who just don't know, and there are people here who try to go out of their way to piss me off. Boyd is not one of them. The people I get upset are people who try to piss me off. Thank you, Matt. Now, Matt, can you choreograph with your mouse? Because I can't right now. Actually, you know what? I can. here's what I'm going to do. Here, I'm going to take a screenshot and I'm going to choreograph myself. Okay. I'm going to take over your screen now, Matt. Thank you. Your job came to an end. 1 sec. There you go. Okay. Share my screen right here. Okay, here we go. How useful it is to be digital. Just avoid his mouse right here. That's Matt's mouse. So this is the Vold right here today. Now Matt is using the Vold and I'm using T2104. They're the same thing. There's no difference between them. Okay. But Matt's already has the SPY. My SPY, mine is right there. So I don't want to have tweaking anything around. So this is the Vold right here. This is the SPY. Okay. SPY. Oh, Vold is going down. And SPY is going up. And I'm not kidding. 9 out of 10 times, what you will see is the SPY revert back. I mean, this is not 100%, but I'm going to tell you, every time I think I know better and I don't follow the Vold, I get clipped. Right? Well, Cyrus, they have to eventually meet, but they can meet several different ways. They can meet by this coming down, this coming up. But when I see a line like this, a straight line like this, and I see the SPY getting out of hand, 9 out of 10, maybe even 9.5 out of 10 times, I see the SPY reverting back down. Matt, am I correct, or is there something I'm saying that's not 100% accurate?
No, you're totally correct.
Yeah, and I'm not saying it because I like it or I don't like it or because I have a long or a short. I really don't have a lot of positions right now. I have no vested interest in this, and even if I did, I wouldn't lie to you. But the SPY, the Vold doesn't follow the SPY. The SPY tends to follow the Vold. Now, yesterday, the Vold was just here. Let me see if I could show you. Like yesterday, see this right here? When the Vold is doing this, it's useless. You want the Vold when the Vold is doing this. This is that's cumulative volume is coming out, not coming in right now. Okay. So if you see it doing something like this, it's not really effective. It's useless. But if you see it moving up like this or down in a straight line and you see divergence between the SPY like it is right now, usually from what I've seen, the SPY comes back to the Vold. Okay. Bernard, I don't know what HFCI is. Okay. Just wanted you guys to know that. Now, I know you're like, really? I know every time I think, nah, not this time. This time it's different. I get my ass handed to me. I'm not kidding. I do every time. Now, this thing can right now start coming up. If it does, that changes everything. But if this pretty much continues moving down like it is right now, I'm telling you that SPY reverts back. And I've seen it over and over and over and over and over and over again. Ralph, we did one already, and we took a profit on it. It's right here. Did you miss the boat? Here's the divergence. Here's the fill price to enter, 225, and here's the exit, 274. The trade lasted a long time. It lasted a very long time. It lasted 15 minutes. Yeah. You missed the boat on it, my friend. You missed the boat. Can't miss the boat. All right. So far, Vold is. I look at TLT going down 2 and make money on. I'll get out when it goes against. All right, Karen. How does the decrease volatility? Don't, Dan. I wish you guys would post for everyone to see because you're asking good questions. That's what Dan is saying. Now, Dan, I can answer that question, but if I answered that question, it would be totally over your head and it wouldn't help you 1%. So how about I just tell you that don't worry about decrease or increase volatility and the VOLD. What I can tell you is this: increase in volatility will usually drive the VOLD south, and decline in volatility will usually drive the VOLD higher, but it doesn't have to. And that's about as far as I want to answer that. You're actually asking a pretty damn good question. Charlene says it's cumulative volume index. We're seeing volume coming into stocks or going out of stocks. And we could see that volume is going out of stocks after the opening bell. Volume has just been going straight out of these stocks. Adam says SPY 90 says profit. SPY put lottery. Good for you. Good for you. But that's a good question. It's a good question. Fair question too. Okay. What do I think about the market structure right now? Well, we clearly broke this market structure. My Picasso drawing did not come close to, well, it actually did. It came about 2/3 to fruition. Folks, I'm going to say this again. Fundamental news supersedes all technical price analysis. Okay. Let's say we have the most perfect A+ setup right now on the bond market, and Trump comes out and says, we're not going to be selling yield to other countries. Whatever's happening to price doesn't go.
Oh.
So understand that right now. Gitano, we're not talking about recession right now. Although if we keep changing things around, we're going to get there faster than you could say, "Who's your daddy?" Now let me show you something here. Now what I'm going to do is I'm going to move this horizontally without trying to move the bottom part. Here, somewhere right there. Yeah, right there. Okay. You see how this completely is on its own island? It's outside of this. The structure is broken. Now, this can end one of two ways. We can test the old structure, which is right here. We can test, price can come up here, maybe go a little bit higher, and then start coming down again. Where have we seen that before? Well, we've seen it right here. We break down, we go down, we go to the 200-day moving average, and then we come right back down here, and we continue breaking down to a new structure. Now we have to test the old structure like we did here before breaking down into another structure. Now, there's another way this can go. The other way this can go is we can right now, or at some point today, we could start seeing some aggressive buying coming in, which, as you could see, we're not seeing right now by any stretch of the imagination. This is the least aggressive buying I've seen probably. This is not very aggressive, as you could see. You see, there's no big candles here. Look at the size of the candles. The candles are the same size. Big candles equals institutional involvement. Do you see big candles coming in? No. Volume's going to be high today, no matter what. Yeah, volume's going to be high no matter. But there's no buying here. There's a meeting of the minds here. That's a problem because we're creating a new structure. We have a meeting of the minds. You don't want a meeting of the minds here. You want this thing to open here and start bolting higher. This is a 5-minute chart. By the way, Matt and Kane, the reason I'm all dressed up, I had an interview with Market Beat this morning. It'll be out in a couple of days. It's pretty cool.
Nice.
Oh, nice.
Yeah. It'll be cool. That's what I was doing before coming here. Partners will respond. We have uncertainty. Yes, we have uncertainty. We don't know how our trading partners will respond. We only know about 60% of the equation right now. 65% of the equations. Hey, Deanna, how are you? We don't have the full Monty. We don't have the full picture. We really don't know what is going to happen right now. We still don't. That's the problem. We still don't. We're starting to get a better idea of it, but we still don't. Remember, we can't have. Yeah, of course. I'll post a link, Kevin. I'll post a link for everybody when it's going to be out in a day or two. But they're an online publication. But we have broken the structure, and if we break a structure, we either go to that structure, we come back really fast, or we start doing this. We start doing this here. We start building another structure. And I said that's going to be a major, major problem. Now, could things turn around today? I'm kind of, let me give you the two scenarios. So that's scenario number one. And Kane, please feel free to interject and add if there's anything I'm saying that you do not agree with in any shape, way, or way. This is not a this is a democracy here. So this is a problem. Now there's another way of looking at it. Okay, there's another way of looking at it. And yeah, we broke the structure on the mega caps and everything. Right there. See, look at that. None of the part of the meat of this lowest bar touches that area. So remember, the day's not over yet. The day is not over yet. What could happen today, we could start filling this gap, which we may or may not do. But we could start filling this gap at 40, say 45, or on the QQQ. We could start filling in this gap at 460, which we're 3 points away from. Or on the SPY, we can I don't know. Oh, here it is. I just want to make it easier for you to see. Right here. So here's our box. As long as we stay in this box, and you could look at the high here. It's what, at about 458. Here's the video link, guys, for anybody who wants to review this video. Trump has put the deal out there. We meet you tax halfway. Now it's your move, Trump, to the world. Thanks, Moondog. I'm just reading what Moondog is saying. So look at the size of these candles. Do you see this market being in a rush to get up there? Do you see us trying to recoup this? Do you see any investment banks? No, I'm not seeing any of that. Let's look at VIX. Yeah, VIX could potentially topped out, but let's see where we're at. We're not in the gap. It's obviously doing the opposite of what the market's doing. Now, one thing I like is structurally we're lower. This area on the VIX marks a higher low, which means we couldn't break that area. But we're almost there, and the day's not over yet. So we're almost there. So we got to be careful. But this is encouraging because, look, let me explain. 311, right? Look, 311, we were like over here. Sorry, we weren't over there. We were hold on a second. We were right here. Sorry, we were right here. So we got a little bit of divergence. See this low here. VIX went all the way up here, and it looks like we're only matching that area, or not even matching that area, and we're below it. So we have some divergence. Now, I'm not a big divergence guy, but in this case with volatility, it could be meaningful. But again, the biggest giveaway to me is that this is the market open after a huge move like this. That's a big move. Matt mentioned that this could potentially be the biggest move we've had since he's been working here with me. That says a lot. I don't think that's the case, but nonetheless, that says a lot. But look at
I think it was on the SPY.
You think it was? Okay. But again, look at these candles. I'm not seeing big candles. Big candles means institutions, aggression. Not seeing that. I'm not seeing that at all. I'm seeing us kind of consolidating near this area, and that doesn't usually lead to anything good.
Yeah, on the VIX, I also like that it kind of gapped up to that level. It wasn't a slow build up to the level like we had the previous time.
Yeah. But again, see, we made a lower low here, and the VIX didn't. And the VIX is very sensitive. Now, a lot of folks, VIX is broken, blah blah blah. I don't think it's broken at all. I think it's just got desensitized over COVID. But look, it came up to these levels. And yeah, the fact that it gapped up is also a factor where here it just kind of slowly crept up. And the fact that we couldn't go over these levels. So maybe. But again, so here's the other scenario, and I don't mean to drag this out, but the other scenario is at some point today, So the first scenario is we stay out of the structure. We just kind of chop around here, putz around here, not really do much, and let the market kind of show its hand. We maybe come up here a little bit, flirt with this level, get FOMO Joe excited again, and then we come back here. We come back down here. The other scenario is something happens in the next couple of hours. Whatever it is, this isn't happening right now. I just want you to know this is not bullish price action here, but we get real parabolic bars and we start moving higher and we bolt and we close somewhere up here. That would change my tune. So I don't want to give you a mixed scenario. I kind of want to give you the two extremes. The one extreme is we kind of just stay in this area more or less. And the other scenario, we break out hard with bars 3-4 times the size of this and really start coming up. I don't see what that catalyst would be today, but again, I can't predict the future, because it's defensive for the same reason. HG, look at BJs. When things get bad, people don't shop at food prices and prices at BJ's. This is where people go to save money. My dad got a membership 2 weeks ago. A month ago, excuse me. I got a membership about a week ago. This is where I'm going to go to buy gas. This is where I'm going to go do some shopping. It's on the way to where my daughter, people go to discount stores when things get bad. It's a defensive mechanism. It's safety. Yeah, it's Costco. Look, here's the thing, guys. Whatever happens with the market, we're still going to live our life. We're still going to eat. We're still going to use toilet paper. We're still going to wear clothing. We're still going to do all that stuff, but we're not going to do it at Macy's. We're not going to do it at Nike. We're going to do it at BJ's. You understand. Yeah, I think you get it. We should wait for global response. Tariffs, things will get wild. Well, that's kind of where I'm thinking, Cyrus. I'm not seeing any clarity. I'm not seeing any. Excuse me. I'm not seeing any clarity at all. I was hoping I was going to read the paper today and that I would, but I didn't do that. Maybe institutions are waiting to see what the world does. Yes, that's Isaac. That's exactly right. That's what Cyrus just said. So, Kane, I've been talking and talking and talking, and even if I shut up, Matt won't say a word. So maybe you can give us your 5 cents.
Yeah, well, I think that you're spot on. Obviously, we had a very limited range during the open hours so far in the SPY, and we really do need to see some sort of movement. So you were talking about volatility, or right here we have a very limited range because people are kind of uncertain as to exactly where it should be. So we're all agreeing for the moment that we're just going to stay in this tight range. If we have a lot of uncertainty, that is marked by a large price range. And if we're looking from yesterday today, we do have that large price range. So if I say, if I ask everyone how many hours are there in a day, everyone's going to tell me 24. There's zero uncertainty about that. So it's just going to be a flat line. All the dots are going to hit in the exact same spot. But if I asked everyone something like, how many dollars were printed during COVID? How many US dollars were printed during COVID? I'm probably going to get, 100 people will give me 100 different responses. And some of them will be close and some will be really wild. So your range is going to be huge. So that range is an indicator that people just don't know where prices should be, but because we have fear, it went down. And if we continue to have fear, as some people are saying, hey, we don't know what the world's response is going to be, once we start getting an indication, or if that fear starts kicking in again, then you could be going down for another leg. And so the only way that I see us moving up higher today is that the market gets some sort of comfort that it's not going to be that bad, that we are going to start backing off. Yeah.
Now, see, here's the thing. I have a disadvantage because I go out of my way to stay out of all the political news. So I kind of hear it the next. No, I really do. I go out of my way. I don't listen to the news at all during the day. And at night, I pretty much look at what bar chart says, or I'll look at my phone what Yahoo, the main page on Yahoo says. That's the extent of my news watching. I honestly, it just doesn't help me trade. It doesn't help me do anything, actually. Sometimes it's entertaining, but that's about it. But
Same way, because
yeah,
you could get jerked around too easily and make a
yeah.
bad trading mistake.
Exactly, exactly, absolutely. Yeah. So I just focus on what the charts are telling me, and I've been doing quite well without any of that noise. But right now, news is very sensitive, and unfortunately, this political discussion is what's driving the markets. Usually, there's a good distance between the two. Uh, I don't listen to Kramer, Richard. No, no, don't listen to Kramer. Switch your settings, Richard, for everybody, so that folks can see what you're saying, because it's kind of funny. But no, we don't want to listen to Kramer. But folks, we have a lot of uncertainty, and what's happening also is a lot of you trade options. When VIX does this, your options become very expensive. Your options have twice as much implied volatility here as they did over here. So that's another reason why I'm trying to be very, 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 very extremely mellow with giving you guys trades right now. I don't want you to overdo it. No, that's okay, Richard. It's all good. It was funny. It would be nice to share it with everybody. Volt is still going down. Look at this thing. T210. Look, still going down. I mean, not at the same slope as here, but it's still going down. Still going down. Yeah. So anyway, that's where we're at right now. Bonds we're at the 200-day moving average, kind of that main area here. So we got to be really cautious. But I do like the fact that bonds are coming off a little bit. That is good, because bonds is a big market, folks. It's a big market, and bonds are in the gap. But the correlation between bonds and stocks is not minute by minute. It's not like gold and U.S. dollar. It's rather different. So we got to be careful. The point is, I want you all to be super, super, super careful right now. I'm going to give you stocks today, and I want to hear comments from Kane about those stocks, but I want you guys to be really, really careful today. The market is not operating on all fours. It really is not operating on all fours. It's touch and go right now. Also, because we're below the 200-day moving average, there's a lot of funds that will not buy. They're on sell mode only. And on top of that, the volatility. Kane and I talked about this the last time Kane was here. That there are, and folks, this is the first time you're hearing this, listen. There's an algorithm. There's a specific set of institutional funds, and they're very large funds, and they do not engage. They do not engage with the market. They don't do anything when volatility is beyond a certain level. Whatever that level is, we're beyond that level right now. That level, if I had to guess, it would be somewhere between 17 and 20. We're beyond that level right now. Actually, Kane, do you know what those levels are? You may actually know what those levels are.
These days, I think it's right around 20. So you're
Right
spot
around
on.
20. Yeah. Okay. All right. So, folks, what happens is, and this is what I was trying to tell you yesterday. So let me show you this. I did this morning, but it's really this is worth your time, because times like this don't happen very often. So let me show you this. Check this out, Kane. I thought this was really telling yesterday. I made it a little bigger so you guys can all see it. So yesterday, this number went to 600. We're now at 935, which is extreme.
Wow.
Extreme. Right. But
I don't think I've ever seen that big.
That's one of the highest I've seen. That's one of the high. Yeah, volume is definitely this market. I'm telling you, this market can really go down. People don't. They think I don't think they appreciate what you and I. The level. They'll see it for themselves. They'll see it for themselves. But I don't think you guys appreciate the level of what we're seeing right now. So look at this. So this is highs and lows. So without ETFs, we have 706. Yesterday was 23. The day before that, it was 155. And here with ETFs, it was 169. Okay. But the problem was the upper. Usually when you take away from the bottom, it goes up. It's like a yo-yo. It doesn't just. But what happened 2 days ago was the number of stocks here. I want to show you this. 169, 290, right? See that? 287, 290, 169. Okay. And then yesterday, 27. So yesterday we were coming up. So that's that's as of last Friday till today. We basically went from 290 to 27, right? Now, look at this number. It went from 90 to 55. So the bottom went from 160 or 100 something to 290, right? And then it went back to 27. And this number declined. It went from 90 to 55. And yesterday, when we went from 200, when we went from here, when we went from 169 to 27, this thing went from 55 to 65. And I was telling folks yesterday, congratulations, Karen, good job. I was telling yesterday to folks that even though our momentum to the downside looks a lot better, nobody's biting anything to the upside. And when I say nobody, I mean literally nobody. Today, we're now at 127, and that's raw. That's got inverse ETFs. You can't look at this today. 74 stocks right now making 90-day highs, 706 making 90-day lows.
Wow.
So without getting all of these numbers, basically it goes down and then it goes up. So whatever you lose at the bottom, you get like 75%, 90%, that basically, like, if it goes from 100 to 200, this will go down 75. They move together, obviously, because you only have a certain amount of stocks. But in this case, nobody was buying. So what does it tell us? It told us that we saw a lot of short covering, right?
Money left the market yesterday. Yep.
But didn't the last few days. We saw some short covering, but nobody used that money to buy anything. And to add insult to injury, what kind of stocks did I have yesterday on my watch list? Well, consumer staples, insurance. Okay, you're going to need consumer staples. Doesn't matter what tariffs are going to be, right? You're going to need insurance no matter what tariffs are going to be, right? How about utilities? And garbage pickup. I mean, what does that tell you? If that doesn't tell you everything, what does that tell you? Why so much difference between 90-day breakout? Because folks are selling the hell out of their stocks right now.
Yeah.
Because there's a huge selling pressure. Look, Peter, I wish I could. I can't. Matt will show his screen. And you'll see Volt is just going straight down today. Volume is just coming down. Peter, we right now have ADD is at 1920. We have 1,920 stocks down ticking from yesterday. Almost 2,000. So let me check the SPY once again. And I hope you guys, and again, I don't have like an agenda here. I'm not trying to scare you. I'm trying to make you guys, I'm trying to be as objective as possible with you, but I want you to know that things are not looking that great right now. Okay. Is because preparing for summer and tariff repercussion. This is all okay. If anybody's still living in Disneyland, this is all because of tariffs. So, Yeah, Peter, yes. Peter, look. Peter, let me show you something, Peter. Hold on. Let me show you something, Peter. Let me show you something. Look at the kind of stocks that were going higher to look at this. Here, this is yesterday. Consumer staples, natural gas, gold, soft consumer staples. I think this is a mechanical company. Correct me if I'm wrong. Dollar Tree, utilities, Dollar General, Monster Beverage, again, consumer staples, insurance,
Oh.
natural resources, coffee, which has no relationship to the market, it's a commodity. Albertsons, cheap supermarket, Kroger's, I mean, and Kroger too. Berkshire Hathaway, because he has the highest position of cash right now. These are all energy, utility stocks. Another gold, another insurance, I think, Mr. Cooper. Please correct me if I'm wrong. This is something that we need for sure. REIT, American Healthcare, REIT. Do you see gold? Garbage. I can't say defensive in any other way. So you see, Peter, even the stocks that are going up, do you see the type of stocks that are going up? Mortgages, thank you. I appreciate it. You see what I mean? And Peter, by the way, I know you work evenings and all that, but just FYI, I've been talking about this like 2 hours every single day and posting in the Telegram channel. This isn't like news for anybody who's been coming here. This is really like old. So see how are we in a rush to break out of this? Are bulls getting emboldened? No, no. Look, we've been here for an hour. This is the structure. This is the day trading structure we're in. Nothing. If anything, the only arrow we had recently was to the downside. The only reasonably down arrow was to the downside. So I'm not seeing that shakeout reversal on high volume, anything like that at all. All right. Kane, tell us more about the kind. Oh, let me do this. Let me go through my stocks. All right. Let me go through my stocks, and then we'll ask Kane. I want Kane to talk a little bit about his project. Let me go through my stocks. Jack in the Box. Don't look here. Look here. Now, a lot of these stocks are a little overextended, and I would look for a pullback. But look at how clean this trend is. Very, very clean trend. Let's take a quick look at the SPY. I'm just trying to gauge the SPY while we're together. Well, at least the SPY, silver lining, we're on this side of the VWAP. We're defending this side of the VWAP. But again, we got to get past 548. Got to get past 548. That's that structure right here. That's the box. That's this right here. To get back into this box, we have to get into here, and we can't even get above. Usually when you have a gap down like this and it means business, it'll usually start taking out the high pretty quickly. Not really seeing that at all. Yeah, consumer staples, that's right. Are hoarding cash? Yes, they are hoarding cash. Some of us are learning appreciate level of experience. Thank you, Boyd. I appreciate it. No, I don't think we hit bottom either. I'd love to tell you that we have, but it just doesn't feel that way. What do you think, Kane? Just your gut feeling. I mean, we're not going to hold you to this.
Yeah,
Does it,
I think there's more downside. I don't think we're quite there yet.
what about you, Matt? The man who can't stop talking.
Yeah, I think this is fluff right now. I don't know if it's going to happen today, but I definitely think we're going lower.
Another thing, I just want to show you all something, folks. This is my scanner. This is not my scanner. This is my sector index. And I look at this from this is like a very broad thing. What I like to see is I like to see which sectors are up or down. I like to see how much they're up or down. And honestly, what I usually look is I mean, obviously, if they're all green, the market's probably going to be bullish or red. But look at technology. Technology today, which is the weakest sector, is still below the VWAP. Energy, below the VWAP. Consumer cyclicals, above the VWAP. That's good. But look where the gap is. This does not look good. Typically, if something is under 1% up or under 1% down, it's random. Anything over 1% means business. You got a lot of sectors here who are down several, 5.5%, 5.7. These are real numbers. These are real numbers, real numbers. So, folks, I'm not trying to like scare you. I'm not that kind of a person. I'm just being realistic with you, and I want you to hear it. I'm not trying to. We could trade this market fantastically. We got shorts. I got shorts galore right now. We actually put on a short today in in the pit, and it doesn't this doesn't have it actually it makes day trading more fun because when especially when more institutions come. But yeah, so this is one of my shorts right here. I'm not going to give you options today because I don't think it's a great day to unless I see something that looks perfect right now. To me, this looks overextended. I'd like to get it closer to the 2757 area. MGPI. I don't think I've ever traded the stock before. And this is a consumer defensive stock, but it's got wineries. I wouldn't really, I kind of put alcohol in their own little pocket. I wouldn't say that alcohol is the same thing as milk or as cheese or it's or Guild. It's not the same thing. People obviously don't need alcohol, but the stock hasn't been doing well for a long time. That's the kind of stocks we like. The kind of stocks that don't do well and kind of stocks that go down after earnings. Probably wouldn't day trade the stock, but I would consider swing trading it if it came up back to the VWAP. Okay. Again, I don't want to give you options today because options are extremely overinflated right now, and I would prefer you guys would just chill today. I honestly would. Holax, not a day trading stock. You need alcohol, Gitano. Is that you? Is that you? No, Gitano. I guess different person. My tech funds are lower than last year. 24 April low from 12 months. Yep, yep. I warned you, Sean. I warned you. Down for I don't like IPOs right now. This is not the market. I warned everybody who emailed me about that Newsmax IPO. I said this is not the time for IPOs. You want to buy IPOs. You want to buy IPOs when markets are extremely bullish and everybody's happy. And I scared Roger. Gonna need a hugs. Lies between chain link. There you go. So again, I wouldn't day trade the stock, but perfect swing trading stock, very close to the 8-day EMA. I would obviously wait for it to start weakening. Great looking stock. Not the first time we're talking about this stock. Now, this stock is going to eat it. By the way, look how well it bounced off the VWAP today. Isn't that beautiful? Look at that. Just beauty, beauty. What a beauty. By the way, Matt, we just broke our record for having the most people here. We have 519 people on Zoom, and we have 97 on YouTube. We have over 600 people here, which we usually don't get till the morning show we do, but not this. So thank you all for being here. We really appreciate it, and I hope that this is beneficial to you. By the way, speaking of my 401k, I bought another 100 shares of Walmart today. I'm buying Walmart every time the market breaks structure, I buy 100 shares of Walmart. Woo! I think I have about 600, 700 shares at this point of Walmart. But and this is for long, like holding for the next maybe 7-8 years. Okay, in case you guys are interested in what I'm doing, it's the market that are pulling us to you. There you go. Yeah. So again, that's not has nothing to do with trading. That's for my retirement. Okay, which I'll probably never happen. Yeah. That's totally being it. So think about this. You got a Scorpio tanker. This thing goes back and forth. It's dependent on oil. I mean, this thing is straight. You could make a story about this company in light of the tariffs right now. Look at Kane. He's like, I mean, this is like squarely in the middle. I mean, this stock cannot get away from it. Okay. Thanks for the thumbs up on YouTube. I appreciate it. This is a dog. This is a dog. Now, my suggestion would be wait for it to. It will have some kind of a bounce. It usually does. I mean, maybe it'll go a little lower and have a bounce. You won't be late to the party. I think this thing will continue moving for a little while in terms of this tariffs. We may catch some good news from Trump. Maybe he'll try to cheer up the environment in light of what the market's doing right now. Point is, I like the stock short around 37, 38, 37-ish area, okay? Seco. Not a day trading stock. Not a day trading stock. Again, I'd like it closer to 2266, but it's a pollution treatment control, industrial sector. If we go into a recession, you're going to have a lot less pollution and treatment control for businesses. They're closing, Remember what I told you about this stock, folks? DLR. Keep your eye on this stock and companies that deal with what the stock does is it's a very interesting company. They lease space for server farms. They create server farms. Who uses server farms? Well, anybody that has a software company that uses the cloud. How about Zoom? How about IBM? How about three-quarters of every tech company right now? And they don't have the space for these servers, and servers are still pretty big. So they need to have air-conditioned, cooled areas. And so they buy land, they build these structures specifically for housing servers. The thing that comes to my mind is always Zoom, because Zoom uses a lot of servers. So the point is, if this stock keeps going down, it's this is a very good gauge of how server farms are doing, because if this stock goes down, basically all the computer, the software, anything with networking goes down. So keep an eye on that. Okay. ENTG. Don't know how we got on that topic, but this is a semiconductor company. This semiconductor company couldn't even get to the 200-day moving average since July. Every time it went to the 200-day, it couldn't even get there. This is a real dog, folks, a dog. Should you be selling it right now? Well, maybe wait for it to get to the 8-day or have a breakdown from the 8-day. But this is a weak dog. Look, today the market's right now, the market, it was going up from what I understand, a little bit here, right? Right here, this area right here. What is this stock doing? Doing nothing. Doing nothing. Those are the kind of stocks you want. Let me take a look at your stocks, Venkat, real quick. Amazon broke the structure. Oracle did not break the structure. The stock there's a lot better stocks you could find than Oracle. Now did not break the structure. Microsoft did not break the structure. IBM not even close to breaking the structure. No, these are not the best shorts. There's much better shorts than this. Like, for example, Nike, Lulu. Why do you guys want to let me ask you a question. When you go to the horse race, do you bet on a sure thing, or do you bet on like the needle in the haystack? I'm giving you stocks that have like a 90% chance of going down because they suck. They've been going down in this economy. Why do you want to give me stocks that haven't broken the low? You gave me 4 stocks that didn't break the low. That means they have relatives. Omar, please stop posting stocks that we currently have in other programs. Please don't do that. I don't appreciate you doing that. Okay? Don't do that. Puts a week ago, cashed out $2,000 profit. Very nice. Very nice. Matt, why don't you repost that? That's very nice. Matt, you look so engaged in my conversation right now. It's amazing. I know you're not feeling well. Do you have a fever?
Slight.
Yeah. Have you been taking Tylenol?
Tylenol, allergy medicine, Robitussin.
You've been throwing the kitchen sink into it, basically.
Yep.
All right. Keep doing it. Now let me give you stocks that I like to the upside. KDP. Why do I like KDP? Can anybody tell me why I like KDP? What is KDP telling this whole tariff thing? They're giving it the middle finger, right? Thank you, Just Jen. Trump plans to remake. Let me just read what remake the U.S. economy, world economy reset. Figured a recession would be coming anyway, so he's going to stuff us before midterms. Yeah, I think he wants to rally the market for midterms. I don't bet on any horse that takes a dump right before the race. There you go. Okay. But you could see why I like this stock. How about CNP? By the way, I've been giving you this stock now for 3 weeks straight, every single day. How about AIG? Are people going to stop buying insurance? No, they're not. They're not. MNST, are they going to keep drinking their caffeinated monster beverage? No, I don't think so. Doesn't seem like it. Although, you don't have that much more left here. Always look to the left. You don't have that much left here. Rolla. Now, what does this company do? I'm dying to know. What does this company do? Can somebody tell me? Please. I'm not joking. I'm serious. Please tell me. I have no idea what this company does. Right.
It's like pest control.
Ah, there you go. That's it. That's it. Pest control. People are still going to need pest control. People are still going to need pest control. And pest control is going to get more expensive if Trump keeps kicking people out of the country. Just think about that. Chemical makers, yeah. Waste management, Matt. I'm singing your favorite song. We're still gonna have to
I
pick up
love
garbage, guys.
stocks.
He loves garbage stocks. Yeah, Jim, you and I are you waste management. Now, they don't buy both. They both are doing the same thing. They do the same thing. Again, another insurance stock, AIG, which I already had on my list. I apologize. HIG, Hartford, and Verizon Security, Internet Security. That's it. TJX. Let's look at TJX. Okay, why would I not want to? Do you see this right here? Let me show you. Can somebody tell me why I would not buy TJX? No, I love stocks that are an all-time high. Ba-boom, 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 and ba-boom with a huge, huge wick every time. Look, one wick. When you see a wick like this, that's price telling these levels, we do not want to trade at these levels. We are not interested in trading at these levels. You guys have to start looking at price action. I know. I've been doing it since I was a child. I literally since I was a kid. But well, Matt's age, I guess. How old are you, Matt?
26.
Oh no, you're too old. I started doing it when I was 24. But so it's more than half of my life. Okay, but still, look, boom. That's a reversal bar. That's a reversal wick. Price is not here. It's here. It's rejected this level. Now, what if price starts coming up here? Let it break and then come back to this level. And if it holds, then we buy. Right, Matt?
Right.
Verizon. Let's look at Verizon. I like T-Mobile better than Verizon because it broke out of this area and now it's building a base, but it's gotta come up here. But it's not doing bad. I'm going to tell you, it's not doing bad. See here, it broke this level here. It needed to break this, and it did. And now we're on this side, not this side. And we're tracking the 8-day, which is doing fine. We just need to come up. We just need to get it above here. Okay. All right. Now, I have a class today that I'll be doing at 2:00. And Kane is going to be talking to you guys right now. Kane, are you ready to take over your screen and share your goodies with everybody?
Yeah, I am. Let's do it.
All right. Let me stop my screen share. Can you give, Matt, can you give Kane the power?
Yeah.
The big power. The big power.
There we go.
Now he's got the
Thank you,
power.
guys.
All right, folks, I'm going to be in the background. Matt and I are not needed. If you guys have any questions, Kane is here to help you out. Kane, let me give you something here. This is a link. I'm going to post the YouTube link right here for you. So if you go and if you want, you can go to the YouTube and answer people's questions because we got about 100 people on YouTube right now. And I'm going to post it for you right now in the chat. If I can open the chat. There we go. There it is, Kane. You should have it right now. All right, guys. Thank you for that, Brett. And we're going to tune out. So you guys to give Kane undivided attention, folks. Okay, please. He's going to teach you something very important here. So don't mess around. Don't go tuning him out. Listen and listen good, especially right now. Thank you, Kane, for being here and for doing this.
Yeah, absolutely. Thank you. Thanks for having me here and allowing me the time. So one thing that before we get started that I wanted to share with you guys is that one comment I saw a little earlier was, hey, well, if we all have a feeling that we have a little bit lower to go, why don't we just buy a bunch of puts or put debit spreads, something like this? So the question is, how much lower do we think that we can go? Because if it's just a little bit, then why would you bother? It's sort of like what was it? What was the stock that we just looked at? It was like right before T-Mobile. What was that one? Why am I blanking? It was TJ Maxx, I think. No, maybe. Let's take a look. TJ Maxx. TJX. There we go. Let's see if that one. Okay, yeah, this one. So if we said, hey, if I go in right now, then even if I went in right now, how much more upside is there? And actually, let's pretend it hadn't tagged that level yet today. Even if you went in and you said, okay, I have a little bit of room, how much can I really make? Is it enough for me to make this trade worthwhile? So we always want to look at that reward risk and ask ourselves if it's really worthwhile. So if I go in and I look at something like the SPY and say, okay, well, a bunch of us have the feeling that we have we have more room to go lower. We need to know how much lower can we go in order for us to say, is this trade worthwhile? So one thing that we're going to do is we look to the left, just like Roger was just showing us. Look to the left. Okay, so what is that showing me right here? Okay, we have a couple levels right here. How much lower before we hit that particular support? And then below that, we've got something right there, and then something right there. Okay. So how much lower can it go? Do I think it'll be this one or this one or this one? And that'll determine whether or not I have a trade or if I can design a good trade around this. And that's a little bit of what I'm going to be talking about today, is how can I design trades to take advantage of what I'm seeing in the market. Another thing that we can do over here when looking at the SPY is we can go to the 1 month time frame, and I'm going to adjust my moving averages a little, and I'm going to change my EMA 15 to the EMA 20, because when I look at that on a monthly basis on that SPY, what I find is that over the last more than a decade, we've been on this nice uptrend in the SPY on a monthly basis, and that when we pulled back, we tended to pull back to that EMA 20 on a normal correction. Sometimes the EMA 8, sometimes the EMA 20, and then sometimes we got all the way to the MA 50, like right here, like during COVID, like during the 22 bear market. So where are we in terms of those particular levels where we're already through the EMA 8? We are close to the EMA 20, but not quite there. So that is another level that we can add to our chart right here and say, okay, well, maybe we'll go down to that EMA 20. And then if we break that EMA 20, well, we've got support here, we've got support here, and then we've got support over here, but then it's the MA 50. And the MA 50 would be more of a bear market recession, sort of like COVID and 2022. Okay, so we want to ask those types of questions. If all I do is buy put, then can it, if it only hits that first area of support, how long does it take for us to hit that? Because if it takes too long, then that's going to eat away, the time decay is going to eat away at the value of my put, and I may not make that money. If it makes it down to this 535-ish level that we got from the EMA 20, then how long does it take? So we want to be able to have ways to take advantage of the things that we see in the market and get paid for it. So I always like to tell people that, why do you get paid in the market? Like, what gives you the profit? Can you guys answer that? Why why do you make profit inside of a market? Knowledge. Can I show your chart? Can you guys not see my chart?
Oh, we can see it. They might have clicked off
We
of
can
it.
see it. Okay. All right.
Yeah.
Okay. It's knowledge, movement, betting right, fear, be righter than others, on others people's foolishness, movement. Okay. So what you guys are all sort of saying, not quite, you're kind of like hitting around the target and not quite nailing it. What we get paid for is being able to see something that the market currently doesn't see, but then the market eventually catches up and then sees what we see. Does that make sense? So basically, I need to be ahead of the market. I need to be ahead of the market, be able to see something that the market doesn't see quite yet, and then the market catches up. It's sort of like I have 20/20 vision and someone has like, I think it's 50 vision, like worse vision, 20/40 vision, maybe. And so I can see something because I have 20/20 vision, and that person needs to walk a little bit closer and then they can see what I see. So I can see it before they can see it. So when that happens, then I get paid. If that doesn't happen, if maybe I have 20/20 vision, that person only has 20/40 vision, and I see something, but that something doesn't happen, like that I see something coming towards us, but then before the market sees it as well, that something turns to the left and then just completely goes away. And then so I saw something that didn't come to fruition before the market realized it. And so in that case, I don't get paid. It has to be something that I see and then the market also sees after I see it. That's why I get paid. And so some people who are saying like information, knowledge, sort of, but knowledge isn't perfect, right? And then this is the value of things like insider information, is because you know something ahead of time that eventually the market will see, but they don't see at the moment when you know it, okay? So that's why you get paid. So if you can see that, then you need to be able to express it in a trade in a way that the market that says, hey, the market is eventually going to see this as well. And so when the market eventually sees this, then this particular trade will do really well because the market will want this thing that I'm buying right now before the market wants it. So how do we do that? Well, an excellent way of doing that is through, we could try to do it with single calls and puts, but it can be very, very difficult because time decay really works against you. And so one general principle that a lot of fund managers will work on is buy something, sell something. Or another way of saying is that buy something, hedge it in case you're wrong. Always look at that case where you might be wrong. And we don't usually talk about outright hedges, but one way to kind of hedge yourself is to go into a spread. So you buy something, you sell something right away. That's what a debit spread is. That's what a credit spread is. So the really cool thing about these spreads is that you can adjust them. So we have the probability of the market doing something. And there has to be layers on top of it. If we just traded the stock, that would be enough. If we just traded the underlying equity, just knowing that would be enough. But if you're trading an option, you need to know timing and you need to know the volatility. You need basically all the things that go into the Greeks. So a little bit earlier, we were talking about volatility. And volatility says that if uncertainty creates volatility, because today I don't know, or the market doesn't know if the price should be at 548 or at 540. And so it's been trading in between those two. If everyone knew exactly what the price was going to be, that price wouldn't move anywhere. It looked kind of like was that Killanova? Or was it JWin? There you go. Just like JWin. Everyone knows, for whatever reason, exactly what the price of Nordstrom should be. Even on a day today, you can see it didn't really move that much. It just stayed stuck right in this range right here. Everyone knows exactly where Nordstrom should be trading. And so you don't get volatility. Now, have you guys ever heard that you make money in the markets from volatility? Have you heard that before? I lost the chat. Here we go. Yes. Yes. Okay, great. You make money in the markets on volatility, which if you heard that though, and you hear us talking today, you might be going, oh, then why are we not trading? And then you hear something like, oh, we are trading in a narrow range so far today because we don't know where prices should be. So shouldn't that be a wider range? So what we have to distinguish between the volatilities that we're talking about. So remember what I told you guys about, we get paid for knowing or seeing something that the market doesn't see. So when it comes to volatility, there is the view of what the market sees volatility as is VIX. And the market is seeing a lot of volatility, which means the market maker is pricing in a lot of volatility, which means you have really wide bid-ask spreads. So the market maker knows that there's a big price range, that there's an uncertainty, and it's not just today from 548 to 540, it's actually from yesterday to today from 568 to 540. That's a large range. So we will only get paid if we see more volatility than what the market maker sees, than what the market sees. Okay, so that's why today we're not trading all that much, because the market maker is seeing a whole bunch of volatility, and that's being priced in the options. If you're just trading the equity, then you're okay. You don't have to care about what the market maker thinks of volatilities, because that doesn't get priced into the stocks. It gets priced only into the options. So your opportunities are better right now in just straight equities than they are in the options. Options are way too expensive at the moment. Yeah, are you guys learning something so far? All right. So, okay, great. So how do we take away that uncertainty when it comes to the volatility and when it comes to the time decay? Well, we do that with spreads. So I'm going to be talking about I'm going to be holding a wealth builder bootcamp. It's my first ever wealth bootcamp ever. And I'm not going to go through this whole slide deck. I just wanted to introduce it to you guys. I'm going through a wealth builders bootcamp where I go everything that you could possibly ever want to know about vertical spreads. And that's both debit spreads and credit spreads. There's a lot of misconceptions about both of them, when to use either one of them, when you have an advantage with one or the other, which market conditions that they should be used in, how to manage them. Once you're in, how do you manage them? How do you build them? How do you create them so that there's a high probability? So we talked about probability in the underlying stock, but once you have that, how do you build a probability within your trade? Because your trade, remember when you're trading options, it's not just the underlying stock anymore. Now you have to consider an extra layer of your options. So how do you build a high probability spread? And how do you build a high reward risk spread? And how do you find the balance between the two? I'm going to go through all of that. There's a lot of tricks in here, a lot of nuances that a lot of people never think about. The way that I liken it is, if you're at home and you want to saute some chicken on a pan, and I don't know how good of a home cook you are, but it's going to turn out a certain however well of a cook you are. But then you take a Michelin star chef and they saute that chicken. They're using the same pan, the same stove, the same chicken, the same oil, the same seasonings. They're doing the exact same things you're doing. But why does that chicken come out Michelin star quality chicken versus my at-home cooked chicken? We're doing the exact same things, But there are little tiny details and little tiny nuances that the professional chef is using that I at home am not even considering. And I'm not even thinking about them. I'm not even aware of them. But they're second nature to that Michelin chef. And those little details make a huge difference in the outcome of how that chicken comes out on the dinner table. And it's the same thing with your trades. These tiny little nuances in your spreads can make a huge, huge difference in the outcome of your trades. And if you're not aware of them and you're just glossing over them, yeah, you can have a certain amount of success. You'll have chicken that you can eat, but you won't get the Michelin star chicken. You won't get the Michelin star results. So come to the Wealth Builders Bootcamp. You're going to be learning from me. If you guys don't know me already, I am a former trader or portfolio manager at a $1.7 trillion firm. I used to move $200 billion a day. And there's not many people on Wall Street that could say that. Even if you came from Goldman, even if you came from Citi, even if you came from my own shop, the shop that I was at, there's still not many traders who can say that they've ever moved 200 billion in a single day, let alone day after day after day. So there are a few things that I picked up along the way that other people just haven't seen. And that's what I'm likening to the Michelin star chef. So there are some nuances, there are a lot of little details in there that I can show you that even if you think you know a lot about spreads, I guarantee you, you are going to learn something new. So if that sounds very interesting to you, then we're starting off on Monday. It's going to be 3 days. We will be recording it. So if you can't make it, or if you have to miss part of a session, that's okay. They will be on replay. And we're doing this for a very, very special price. The boot camps that we've done in the past, or not me, but like what Roger has done in the past, those boot camps sell for thousands of dollars, $5,000 plus. And to be able to learn directly from someone like myself who's been in the markets, I've been 20 years this year. It would be 20 years in the markets at a very high level that most people on Wall Street never achieve. And to be able to learn from someone like that for less than a few $1,000s for a few days of a boot camp, that's pretty unprecedented. So you can right now, if you go and you sign up, that's $397. I think Deanna probably has a link for us. If she could put that on YouTube. And I don't know if, Deanna, do you have access to YouTube? But if not, you can go here to tradingpub.com/bootcamp and sign up. First 397 people in the door today will get it for that special price of 397. You could also call our customer support team, 904-706-3539. And I don't hold back on my education systems. I believe education is the number one way to reduce risk inside of the markets. The more you know, the more empowered you are, the more you know about how to use the tools that you have at hand, the safer you're going to be. It's just that simple. So I don't hold anything back in my education sessions. You can always ask me. It's going to be live, so you can ask me any question that you want to. I will go through everything in fine detail. And one of the most important things that I will go over is management. This is something that is highly ignored in the retail world. And professional managers, portfolio managers, they spend over 90% of their time looking at their portfolio and managing their trades, not at looking at this chart and saying, where is this buy going to go next? How do I trade this? How do I get into a new trade? That's not what professionals do. So, are you spending 90% of your time looking at a chart, or are you spending 90% of your time looking at your positions? Probably looking at a chart, right? Not actually managing your positions. Maybe because you don't know how to, maybe because you haven't been taught to, maybe because you're always thinking about the next trade. But even if you don't have enough positions to spend 90% of your time looking at your positions, but you probably should be doing it more than you are right now. I'm going to guarantee you that. So how do you manage your trades is going to be a very, very important component part of that education. And if any of that is interesting to you, if you want to pick up on those little nuances that I use inside of the spreads, then join the bootcamp, tradingpub.com/bootcamp. I'd love to see you there, and I look forward to it. I'll see you guys on Monday if you guys sign up. Yeah, anyone have any questions? Anything that I can answer before we end this? I keep losing the chat box. Let's see.
I have a question.
Yeah.
How long would it take them to master all of these strategies so they can apply it to their own trading?
By the end of the boot camp, you should be able to start applying it right away. I mean, you're not going to do everything 100%, but you'll be able to start using them right away. And what's kind of cool is that by the end of it, you'll be able to start designing your own trades. So even if you take a guru's suggestion, like one of my suggestions in one of my programs or one of Roger's suggestions in one of his programs, generally we just give you, hey, here's the call or here's the put that we suggest that you go into. But if you say, hey, I'd like to juice this trade up a little bit, I'd like to have a better return, or maybe I'd like to have maybe a slightly higher probability, but I'm willing to sacrifice some return, you'll be able to do that because I'll show you exactly how to design your spreads to do that.
Perfect. I'm really looking forward to. I was here. I was here the whole time, just listening in the background. I didn't want to interrupt you, but it sounds really, really. It sounds like you put a lot of work into this, Kane.
Oh yeah, and, I've been working weekend after every weekend.
Yeah.
I've been putting yeah.
So this is a strategy to ensure. This is something Kane will explain everything to you, Bill. But it's definitely something that our strategies are not. There's only so many strategies out there. Stocks only go up and down. They don't really do very much else. But it's how you interpret the market. And I think every trader, every pro trader has their way of looking at the market, and every trader has their way of analyzing the market. And I think applying this into your analysis will only make you a better trader. And folks, I'm going to be honest with you. I'm going to be very honest with you, as I always am. This $397 course, Kane can do a live webinar, and he can charge $9,000, $10,000 for it, and people would pay for it. It's that good. We don't charge our sessions based on how exciting they sound. We tend to charge people the same amount of money. So you're really getting a lot for your value here. I don't think a lot of you even realize how much you're getting for your value, but this can totally change your trajectory from being a okay trader to being a really, really good trader. And that's what Kane is trying to do here. So the value that you can get for this $397 is what a lot of people would pay $10, $20, $30, $40, $50,000 year after year and still not be able to get. It's really worth the price. I mean, I think it's so cheap, it's not even worth talking about. They can apply these strategies. Yes, you can apply these strategies in a large account or a small account.
Absolutely, yeah.
Yeah. And you could do them in actually you could do them in an IRA too, can't you?
Yeah, most IRAs, yes.
Yeah. Most you could do them on that. So, but yeah, it's a great opportunity, folks. And you could start out slowly. Now you're going to be doing the live sessions. You're going to be doing them. So you're going to give them 3-4 hours of how much time are you planning on?
It's going to be probably close to 2 hours per day.
Each session. So you're going to have 5-6 hours. Well,
yeah.
I'm going to ask Josiah to block my calendar out so I can be there as well. And I'm going to be there with my notebook taking these classes. And I highly, highly recommend you folks do the same thing. If it's worth my time, it's definitely worth your time.
And John just asked a really good question, like, will I go over how to find these trades? Well, one of the bonuses included in the workshop, in the boot camp, is I'm going to give you an exclusive strategy. So that, and it's very detailed. If your guys were in the February workshop that Roger had live in Florida, I was there as a guest, and I gave everyone a system to trade earnings, strangles, and then afterwards I gave everyone my handwritten notes. And so if you saw how thorough those handwritten notes were and how they were organized,
very thorough.
I'm going to give you the exact same, well, different strategy, but the exact same thing in the same detail. I'm going to give you a strategy to use these trades with as well.
Beautiful. That's going to be fantastic. Fantastic. People are going to be very, very happy about this. Very, very happy about this. I love when we can do something for low cost, and I know money's a sensitive topic for a lot of people right now, especially with the market doing what they're doing. But
Yep.
no, Greg, it's not in person. If it was in person, it would. That's what I was saying earlier. If Kane was doing this class in person, he would charge thousands of dollars for it. What we decided to do instead was make it really affordable and make it available for everybody and keep the price low. Because I've done it before. I've had a class where I taught algos and I had like 20 students there, and we charged them like 10,000. Kane was actually in that class.
I was
We
there.
charged him, yeah, but the problem was I was able to teach like amazing things to 10 or 20 people. I want to teach amazing things to 500 people, you know. So it's we make less money, but it's much better for everybody else. So you guys are in a good. Did you want Roger? Didn't you want Kane to charge? I do. The live one. Yes, definitely. I'm complaining, but nobody listens to me. I think he should be charging an extra zero for this as it is. Look, here's the thing. If I had something like this 30 years ago, it would have saved me about 20 years of time. 20 years of time. Now, what is that worth to you to save 20 years of time? 15 years of time. That's a lot of time. That's a lot of money you could be making in that time. Just by think about all the little things I've taught you guys over the years, like how to pick the right stocks. Obvious, but nobody teaches that. How much is that worth? Probably $20,000-$30,000 just to learn how to pick the right stocks. So if you can learn something that Kane is doing it's very, very valuable. It's very, very valuable. And I hate to say this, but most of the time that information costed us a lot of money, of our own money to learn. So,
That's
so we
right.
got to make some of that money back. You know what I mean? I mean, come on, right? Like 6 or 7 figures. Yeah, just simple things. Anyway, I don't want to talk here. I know this is your thing, but I wanted to just let you know I've been here the entire time, listening and taking notes. And I hope you guys have been doing, and I've been encouraging everybody else to take notes during this session. And I hope you guys do. Please listen to what Kane says. He's not some guy this guy's the institutional bond trader. He really knows his stuff. That's what I was saying the other day. That there's a few guys we have here in the pub, like Jeffrey, Jeff, Kane. They have committed their life to the markets. That's probably the nicest way I could say it. And those are the people you want to listen to. All right, guys, I'm out. Kane, thank you for being here. Please take all the time you want, but I'm going to get out of here. I got to place a couple of trades, but I'll talk to you guys later, and take advantage of this offer. Don't mess around. Don't play games. He could charge $4,000 for this. No joke. I'll talk to you guys later.
Thanks, Roger. Thank you, everyone. I just flashed that on the screen because there was a request in the chat. But thank you guys for your time. I hope to see you guys on Monday.